And then I don't have to pout.
Are you done pouting? Or are you going to pout the whole day?
I'm a ditch digger, dude. I don't pout. I just
Dude,
get
that's
the work
such
done.
BS. You're a powder just like me and my wife.
How am I a powder?
I saw you pout
I
this
move
morning.
on with life.
Yep, I'm ready. I know you're pouting.
You're just like Maddie. You want to poke the bear, and then you wonder why I get irritated. Like, if you don't want me to act like that, then don't pick on me.
I love it. I just got a reference to his wife. I was just we're gonna put that in the podcast.
So did you.
today.
You just said you're a powder like me and Megan. You just
yeah,
said
but
the same
I
thing.
put it on myself at least.
Well, I don't care. I don't care.
All right. Well, you ready?
No.
You need a minute? Welcome back to the Behind the Well Show. I'm your host, Roger Abel, here with Elias Randel. Elias, welcome back.
Roger, hello. Thanks for having me on the show again. How you doing?
It's the first time you've ever been on the show. I feel like we should get somebody else on the show to join us.
Yeah, that'd be awesome. If we had a guest every now and then, I'm sure people would like that.
You know, it's funny you mentioned maybe we should have a guest. I'm looking for a guest appearance by the Plaid Planner again.
Who's that?
You were the Plaid Planner for a long time, and now you're wearing this black sports shirt. And I know you mentioned that you're gonna maybe just start wearing black polos on every show, but I kind of miss the Plaid Planner.
I've moved on to bigger and better celebrity status for myself, so we'll see what happens. I don't know. Maybe the Plaid Planner will come back. Maybe not.
Well, I know one thing we've been talking about the last few weeks, and it seems like a lot of people are mentioning this. In fact, somebody called in the other day and mentioned this exact series, but it was the Madoff documentary that was put on by Netflix. And I know you watched it before I did, but I thought it'd be good to kind of take a look at, the 5 key things we can learn from this documentary and kind of how he pulled this off and how investors can protect themselves from the same types of schemes.
I think that's a good idea. Before we jump into the actual kind of the highlights and the lessons, I think one underlying thing I thought about while I was watching was the amount of greed involved in this whole thing, because there's certainly Bernie Madoff is a greedy person, obviously, but I think some of the things you think about, there's other people, there's retail investors giving him money, there's hedge funds giving him money. All these people are basically saying, okay, I'm so greedy that I have to have these type of returns, even though most people should know better. You should really know better that's the first lesson. If it looks too good to be true, it is. And then this is my speculation, and I don't believe anyone got in trouble other than Bernie Madoff. I looked it up the other day. I think some people did get in trouble, but he got in the majority of it. I feel like other people knew. I think some of the people investing money with him, they knew what was going on, but they went along with it and that's my speculation. I don't know that's true, but they went along with it because they knew that they could make whatever type of return they wanted. But I just think it's such a greedy, the whole thing, everything about it. That's really kind of was my overall thought and takeaway from it.
Yeah, I agree. It was massive fraud just in every single possible avenue. And what's amazing, there are people that kind of thought it was too good to be true. There were a couple, French money managers that really drove some of this. One of them, his name was René Thierry Magon de la Villechute, it looks like. He lost 1 point. Yeah, I can't pronounce that, man. I'm doing my best here. But he actually committed suicide after he lost $1.4 billion. And I think that's the guy in the movie when someone asked him, well, what if this goes wrong. Like, what if this whole thing is a fraud? And in the movie he says, or I shouldn't say movie, but in the documentary, he says, well, I'm a dead man. That was his exact words. And here's the unfortunate thing about this. This didn't go unnoticed all the way back to 2000. There was a money manager who had rang the bell at the SEC multiple times saying there's no possible way these returns exist. Like, it can't be done. I mean, he was winning like 98.4% of the time. I mean, I think you said it best on our previous show. What's the best way to time the market? Make up the trades at the end of the day.
Well,
so
yeah, that's how you're right 90% of the time, whatever their number was.
I mean, if you think about what it probably takes to be successful as a day trader, it's being right like 55% of the time. If you're right 55% of the time and you're using the same, the kind of the same trading amount each time, you'd be net positive. That'd be a home run. But you're right, 98. I mean, you're never wrong, ever wrong.
To my knowledge, I think it might be called the Renaissance hedge fund, that they're considered maybe the most successful hedge fund of all time. And to my knowledge, they were correct on trades 51% of the time. And they're legitimate. They're not a Ponzi scheme. So that's the most successful, not Ponzi scheme hedge fund. And they were right 91% of the time. And Bernie Madoff's fund was right 90. It was like 96 or 98. It was something so no one's ever even gotten close to that. It was, it's not like you're cheating by 10%. And, okay, maybe that's actually doable if you're lucky enough. Like, that's pretty blatant.
Well, one of the things that really helped him keep this fraud going was that he had a legitimate business that was considered one of the best market makers in the market. And he had ins with the SEC, so it was almost like they were just overlooking it because, it's Bernie. It's all okay. I mean, this business went unregistered for however, it's not hard to check registration. It's literally just, today you just type in the computer. I guess 20 years ago, maybe it wasn't quite as easy, but for a regulator, it should have been about the easiest possible thing out there.
Yeah, and that was one of the craziest parts of the whole documentary was he received a phone call. So Bernie Madoff gets a phone call from someone at the SEC about his investment advisory business not being registered, and he basically just told him, I already talked with your boss about this. I don't have an investment advisory business. And okay, sounds good, Bernie. Took his word for it and moved on.
Okay, so I've got
that?
Something else amazing like that. And this is weird how things in life feed off of each other. But I remember an interview, and I actually just went and pulled this up, when Jeff Bezos admitted to one of his friends at AOL that Amazon would not exist if it wasn't for Bernie Madoff. Because Jeff Bezos was working at D.E. Shaw as a quantitative hedge fund, and he quit in the 90s to open his online bookstore. But he said he quit because he didn't know how he was getting beat by Madoff. He couldn't figure out how he was getting beat.
So he was competing against him, and he just gave up because he's like, I can't figure out how to beat this guy or compete with him.
Nobody could beat him.
Well, yeah, no one could.
I mean, that's even when the other, and I forget the gentleman's name. We'll have to look it up, from the investment management firm. He's like, his boss is saying, hey, you have to figure out what he's doing. What is the trading strategy here? And you mentioned greed. They came up with a trading strategy that would be similar to what Bernie Madoff was doing, but on a monthly basis. The clients ran the risk of putting their portfolio at 50% at risk on a monthly basis to recreate the returns that Madoff was actually getting. So you have one that's basically seen as risk-free, and another one that is a legit trading strategy to mirror this, but 50% of the portfolio is at risk at any given time.
Yeah, that's just nuts.
So I guess here's how people, and I actually think people should watch it. I think it's good for people to watch. I think it helps you learn about, the industry and how these things happen. But I think if you're not going to, the number one thing we can help people with is, what are some of the red flags? What are the things to look for? And I think the first thing you look for, and we've heard this over and over and over, but human nature gravitates towards this. If it's too good to be true, probably is.
And this is sometimes, to me, it's kind of a gut feeling. I feel like there's been things in my life or something gets offered to you and you're like, man, that sounds really great. But then you almost just have this feeling like, I wonder if it's too good to be true. And if you start to ask yourself that, then you should maybe try and figure that out, which, to their credit, there were some institutional investors, Goldman Sachs and Solomon Brothers, they wouldn't work with Bernie Madoff because, one, he wouldn't let them do any due diligence to see how are you trading, how is this actually working. So good for them for not going along with, oh, this sounds great, we're going to do it. They felt like there was no proof. So I'm sure at some level they decided there's too much risk for our clients because we have no idea what's going on. We don't know how he's doing it.
I've actually got a personal story about this. So there was a business deal. There was an acquisition I was looking to do. This would have been like 2015. And it was a gentleman from a different state, like 49 years old. And I'm like, I have this conversation. It's like, yeah, I'll take less money up front if it's all cash and all these things are going on. It sounds great. And I asked him the question. I said, well, if you sell, what are you going to do next? Well, I don't know. I started thinking the red flag is going off in my head. Like it's too inexpensive. He wants to get rid of it and he doesn't know what he's going to do. I don't know too many successful 49-year-olds who build a great business that don't know what the next step is, right? They don't think like that. They think, hey, I'm going to retire or sell this practice and do X. They have a plan. He had no plan. So I called my buddy who was helping put this deal together. And I just said, I don't think I can do it. Something is up with this. Like, it doesn't make any sense. There's no way, like, the guy can't tell me what he's going to do. Tell me you're going to go, like, fish forever and just run off to the Caribbean. Just come up with something. Couldn't come up with anything. So I passed on the deal. Hear back from my buddy a year later. He sold the practice, la-da-da. 3 days after he sold the practice, he committed suicide. And that's
why he didn't know what he was going to do next.
Right. But that goes back to if it sounds too good to be true. If you just looked at all the boxes on paper, it was the greatest possible deal. But my gut told me this is like 5 states away. And none of it makes sense to me why he would do this. He can't, literally, I didn't do it. I had goosebumps today because he couldn't tell me what he was going to do next. Everything else looked great. And it was probably a fair practice, but could you imagine the mess I'd have been in if I bought a practice expecting someone to help me transition it, and 3 days later he passes away? It would have been
his clients would be spooked. They would. That's a major change for people.
Yeah. So I think you hit it on the head. There's this gut feeling that goes with too good to be true. Interest rates today are paying a lot of interest based upon the past 20 years. Some of them sound too good to be true.
What does?
Some interest rates today. I just saw an ad for an 18-month CD at 4.9% with a local bank. If you look back at the last 20 years, that almost seems too good to be true. But it doesn't give me like a spooky feeling in my stomach. It doesn't give me the like weird gut reaction. So I think you hit it on the head. If it just feels weird, it's probably not good. 2, you don't need to be an analyst to see the red flags. If you think about most things that went awry, the red flags or something happened to let people know that they shouldn't be doing it. Remember I mentioned the analyst earlier? His name was actually Harry Markopoulos, and he was a quantitative analyst who he actually alerted the SEC that there was a problem, and the SEC swept this under the rug. And in fact, there was a feeder fund that went out of business. And the SEC did an investigation of the feeder fund and cleared the feeder fund of any wrongdoing, which ultimately almost gave Bernie Madoff more power because they saw it as legitimized by the SEC because they cleared this feeder fund. Like, if you're having an investment in a feeder fund that goes out of business because of potential fraud, Why would you keep your money and roll it back with the guy who's actually running the investments? Other than
It's a great question.
everybody wanted their 1% per month with no risk.
Yeah, honestly, watching it's one thing, but then the more we talk about it and the more you think about it, it's really incredible how long he pulled this off. I mean, and he grew $65 billion Ponzi scheme. I mean, that's a lot of, I just feel like a lot of things really lined up for him. Like a lot. It was like the perfect storm. He was the perfect guy to pull this off. He had the perfect relationships where people trusted him. No one ever thought he was going to do wrong by anybody. And he's doing very highly illegal things. One, you have an investment advisory business that's not registered. Like, that's crazy that could even exist. You got a phone call about it, told them, no, I don't. And they just listen.
That's bananas.
If we didn't, like, if we did the equivalent and the SEC called and asked that, they wouldn't take our word for it. I know that. But Bernie Madoff is so powerful, they just took his word for it.
Because he was connected. He was so interconnected into the community, into the SEC and the investment community in general. 3, don't put all your eggs in one basket. And this is tricky because people that were investing with Bernie Madoff probably were getting statements that they had diversified portfolios.
Yeah,
they felt diversified.
They were getting trade confirmations too. They're just fake.
So they didn't feel like they were putting all their eggs in one basket. So when you work with an advisory firm, one of the things you can do is look to, hey, what are the different companies or what are the different ETFs or mutual funds that they're actually using? Maybe it's individual stocks. And if you're putting all of your money in XYZ fund, you run the risk of XYZ fund sinking you. I almost equate this to when individuals come in here and they have highly concentrated positions in employer stock. And they don't understand why we tell them we really don't want you to have more than 10% of anyone holding in any one company. And all I mention is one name, and then it makes everybody think differently. I said, nobody thought Enron was going bankrupt. All the people that lost all their money in Enron, all the employees that had this stock that had done phenomenal, none of them thought they were going bankrupt. Had they just had 10%, would it affect their life? Yeah. Would it have bankrupted them? Most likely not.
Yeah, I mean, if almost anyone, you can probably afford to lose 10% of your portfolio. Painful, poke in the eye, but you can probably overcome that with enough time and some planning and just knowing that you got to figure it out. And yeah, I mean, I feel bad for the people that lost a lot of money, and it, because they probably thought they were diversified. So it's hard. This one's a hard one, right? Don't put all your eggs in one basket, because they're painting this picture like you're a diversified investor, you're doing all the right things. So you'd almost have to lean on some of the other things that we already talked about. Just like, this just seems too good to be true. Because this one, they did a good job of kind of pulling the sheet over people's eyes, or whatever you want to say on this.
Well, a lot of this money was directed by this French financier who I mentioned earlier, this Villechette. He had really successful, the wealthiest people in Europe investing money with him. Yeah. These people were entrusting him to go do the due diligence to find the investments that made sense. And I'm guessing these people didn't just have him. Most wealthy people have more than potentially one person, but maybe they did. And this guy really drove a lot of the Ponzi. So I want to say they brought in like $19 total billion, even though on paper it showed a worth of $68 billion. That was with all the interest and gains that people had. But this Villechette, he had $1.4 billion, brought in $1.4 billion himself for Madoff.
Yeah. Yeah, this guy, he's the guy that he committed suicide after Bernie got arrested.
So don't put all your eggs in one basket sometimes can be more difficult. It's easy for us to say, don't put all your eggs in one basket. But my guess is none of these people thought they were. So if you're concerned about that, just have a conversation with your advisor and say, hey, how am I actually diversified here? And what's my risk if XYZ company goes out of business? And have them explain that to you. 4, be wary of market fads. We've seen this recently.
We're going to see this more now.
Well, I think we're going to see market fads more now just because of the availability of information and how fast social media can spread information. But you know why people want to invest in it?
Fear of missing out.
It's the shortcut.
And greed.
It's the shortcut.
Yeah.
They think it's their way to the shortcut. Instead of doing all the hard work of setting up systematic savings and working some extra hours and watching their spending, they want to get a lottery ticket. Elias, I'm looking at the last item on this list, and I think this actually could be the hardest one to do. But it's trust but verify. Today, I believe it's easier to verify than it was 20 years ago. You could go really quick and see today whether Madoff Investments was even a registered investment company. Like you could just literally,
you could easily do that.
Yeah,
now.
Today I could get on the computer and in 35 seconds, I would know whether this is a registered investment company or not. Okay. But if you think about how most people verify by the friend that referred them. That's their verification process.
A lot of times, yeah.
Yeah, well, so-and-so over here has been investing with this guy for 20 years. They get their dividend checks. They're averaging 12% a year. They make 12% every year. It never goes down. And I've been doing it for 20 years. And most people see that verification as enough.
Well, and that's what Bernie Madoff had. He had a huge network of just really good referral system because people trusted him, and when he needed money, there was plenty of people waiting. He just start hitting people up. Hey, we need more money. Now's a great time to invest.
And it kind of goes back to, I made this comment to friends of mine who've been fortunate and done well. And they don't even invest with me, but they'll run by this obscure investment. And I'll never forget this. This is probably at least 10 years ago. I was at a friend of mine's house, highly successful physician. And he said, hey, what do you think about this? And it was a non-traded REIT. And I just looked at it and I looked at him. I said, you only have to get rich once. And he looked at me and goes, what do you mean? I said, well, why would you take this risk? And the company he was going to buy into this would have been pre-08. It was one of the companies that turned out to be a complete fraud in 2009 and 10. And I don't know if he bought into the company or not, but my exact words are, you only have to get rich once. And he kind of looked at me like, yeah, okay. But all of his friends who were physicians were investing with this guy, and this guy went out of business. And it just made him think. And that's what I tell people. Why wouldn't you buy investments or hold investments in companies you own, right? Who are the companies we know out there? I can go on and list companies over and over and over that have had due diligence done. They send detailed statements to you about what's happening. Or you can go invest your money in something you've never heard of before.
Yeah. I just had a spooky thought. Sorry, I just got distracted. But yes, and I do have a couple other thoughts on the whole trust but verify. I think if you can do business with people that you are referred to, and I do it, if it's maybe like work on a vehicle, which I have a mechanic now, but like most of the relationships that I have, even my physician, were referrals just because I believe in, there's certain people I feel like I can trust their opinion, so I can start there. But yeah, there's services out there. There's things that you can do to see, especially with financial professionals. Are they licensed? Have they ever had a complaint and things like that? There's FINRA broker check. There's SEC action lookup, and then investment advisor public disclosure. So there's things that are offered that you can verify a person is who they say they are. They're licensed properly, what those licenses are, how they can help you. But gosh, just what a mess if you got caught up in something like that. That would just be a mess.
I mean, all three of those places are places that I would go to look up someone if you're concerned, like broker check, SEC action, IAPD. What are you looking for? You're looking for, okay, if you had multiple complaints, and what are they for?
Right, it depends.
Yeah,
on
I
what
mean,
they're
if you've
for,
done this
right?
business for 30 years, you might have a complaint. I mean, how are you going to keep everybody happy for 30 years?
No business can do that.
But if you have 15 complaints and it's all for unsuitable investment recommendations, maybe there should
Red
be a little bit
flag.
of a red flag. You know, if it was someone had a misunderstanding, you know, maybe you overlook it. But you can find all of it out on FINRA broker check. And once it's on there, it doesn't get off of there. So it could be something someone did 25 years ago. They could have been brand new in the business. But you look for patterns here. Hey, what's the pattern of XYZ individual? Is it good, positive, or negative? And like I said, if they have 15 complaints for unsuitable recommendations, that'd be red flag number one.
Yeah, that, and then I guess I don't know how much I would expect people to know about licensing, but if you could maybe look at, okay, this person says they're fiduciary. Well, maybe look and see if they actually have the licenses required.
Even
to
better,
do that.
if you go to FINRA broker check or the SEC action lookup, it will say registered or not registered. I would just start there. If they're registered, they have some type of a securities license that they've had to pass to be in this business. If it says not registered or you can't find them, it means they're not licensed or they're no longer licensed. And no longer licensed is scary because at one time they had it. They could be off doing their own thing now and not have a licensed company, not hold a securities license whatsoever. But it doesn't matter if you're an investment advisor or, you know, a broker, you have to have some type of a license to do it. The licensing is different. So I think to tell someone to like wade through the mine of what's what is really hard. It's, are you licensed? Yes or no?
Yeah, that's a good start.
Just
are you
start
registered?
there.
Yeah. Yep,
So-
I agree with that.
With that said, I hope with that said, if you haven't watched it, go watch it because I actually think it's really interesting. My wife, who not really into what we do, she actually really got into the show and was asking me a lot of questions about it. So it's probably good if you watch with somebody that even has some level of knowledge of our industry or how it works, probably get more out of it. So with that said, I want to thank everybody for listening to the show. Elias, do you have any closing thoughts for today?
No, just everyone, thanks for listening, and I guess we'll see you next time.